Hi, I wanted to reflect back on what we've seen happen over the last week. And if you put it within the context of what's been going on the last few years, it's kind of helpful to think about where we're going. We've had this major uptake in technology, in particular AI, over the last few years. And the catalyst for that was really companies were forced to do more with less during COVID. So we went through a period of time where it wasn't just coming up with a band-aid of how do I figure out how I'm going to work through supply chain issues and how do I figure out how I'm going to work through labor issues. It was multiple years of trying to figure out how do I come up with solutions. So I really think we have these new technologies where we're having secular spending, so long-term spending. And we've seen the big uptake with whether it's the Mag 7 or the Big 10. And now I think as we get into this year, 2026, it's really going to be the year of disruption. How do these technologies play out and how are they applied with other companies and in particular? And what do we see happening with operating margins and operating earnings? So I think it's a critical point, and we have seen how a lot of these assets and these companies are linked together. So starting last Friday, we saw volatility in the metals market. Usually when we've had a boom that has lasted for a while, there's a lot of margin and a lot of excess that comes into a particular asset class. We definitely saw that in the metals market. You saw a big correction in silver and gold. I think silver is down 19%. At one point, it was the biggest correction that we've seen in the metals market. And then over the weekend, we saw crypto sell off, and then we saw Anthropic come out and make the announcement about other enhancements they have, and that spooked a lot of concerns in the software market. Software stocks got hit. This was last Monday. Software stocks got hit hard, sold off significantly. Some were down as much as 20%. And then there became a lot of concerns in the private lending market. So if you look at the leverage loan market, software is about 12% of that market. So again, when you have a concern in one area, a lot of times we see a contagion. And I think we went through a period of all last week of really having margin calls and shoring up that excess liquidity or the excess leverage that was out there, leading to a big recovery on Friday. But what I think it illustrates is not only risk, but also opportunity. The area of the market that you didn't see go down was value, and a lot of the companies, kind of mainstream companies that are trading at more reasonable multiples. It's interesting, you didn't see money come out of the market in general and everything go down. So it will be interesting to see how the rest of the year plays out. I do think this is the broadening of the rally and the application of AI and new technologies to more mainstream companies. And I think as we see earnings start to report, not just necessarily this quarter, but throughout the course of the year, we are going to see, I think, possible surprises from an operating margin perspective, which could lead to further rotation. Thank you so much.